Let's get across the market over now. Peter Maguire joining us from trading.com. Pete, happy Monday to you. Now, when we take a look at markets, they are at or near record highs, equities at the moment, despite this threat of tariffs. Again, now Donald Trump obviously expanding the tariff regime now to the EU and Mexico. They've got 2 weeks to come up with a deal.
Absolutely, and good morning, Andrew. I mean, it's absolutely dramatic when you're thinking about the number that's going to be introduced for the Eurozone. Mexico, of course, as far as, trade partner with the US. So naturally that will impact their goods being exported to the US. And naturally, President Trump, I believe, wants to bring a lot of that manufacturing back home. So how it's going to be rolled out in the sense of 1st of August and where that's going to impact. Is it going to be the consumer with higher inflation and costs, or is it going to be absorbed by the producer in those countries? And we've got to work through that to see the impact and how that. It's easy to forecast, but I think you've got to be, a couple of months in to get a true appreciation how it looks, smells, and tastes.
All right. Well, let's just take a sort of a snapshot of where we're at, just in terms of those the performance of those various assets in the moment, and how you'd sum up certainly what we've seen in the past week there, Pete.
Yeah, I mean, that US dollar's bounced a little bit. It certainly was up compared to the yen, as you've seen. Gold, very, very volatile, and it's running at that 33.60, 33.70 sort of handle. Yen running at 147.5, Andrew. Canadian dollar, keep an eye on that as well. Euro, yen, dollar index has bounced to the upside. For all the viewers out there, that's the first market I look at each day. I look at bond yields for 10-year and, of course, the US dollar index. So I think that's a good place to start. You're nearly at 98 for that dollar index. It's probably been oversold. I want to see what goes on as far as Fed Chair Powell, whether he's got a job. Well, this is as far as President Trump's concerned, a Fed rate policy and all of these factors moving forward as far as, US dollar strength. Crude oil, it's been choppy, put on a couple of percent, and the overall mood at the moment has been one of, bull market for US equities.
We'll get to that in just a moment, but when you take a look at particularly the US dollar, also gold, what are you seeing there, given we've now got that additional threat in terms of those very substantial tariffs that are likely to hit, certainly Canada, Brazil, Mexico, the EU?
Absolutely. Yeah, I mean, you've got to look at US dollar index, Andrew. It's bounced a little bit back around that 98 handle. It's probably got a little bit of further legs. Maybe you might see possibly a 98.5 over the next couple of trading days. I wouldn't be surprised for that to happen. The next part, gold, but also keep an eye on little brother silver. It's up 4.5% on Friday on COMEX. And everyone's, it's been underinvestment across that whole silver complex for the last couple of decades. You're running close to $39 an ounce now. So it's been a dramatic uplift. It's outperformed gold and outperformed it very strongly this year to date. So that's where a lot of the focus is from retail land. And of course, I think the message going forward, you've got to have it or certainly keep an eye on it over this coming quarter and certainly into Q4.
Now, Pete, as you mentioned there, despite those very real macro economic risks there we're seeing, the equity market remaining very bullish at the moment. There's no sign that that's going to be derailed.
Well, the lens I look through, Andrew, if you're in the road of it, it'll run you over. It's quite simple. It's really had dramatic uplift, S&P, Nasdaq, and of course the Dow. Dow's just off. I've made some notes here. It's only around about 400, 500 points from an all-time high, but the S&P is at that all-time high, Nasdaq. So they're very, very strong. Earnings season this week. I'm looking forward. Banks reports start tomorrow, and then how that all is going to, I think, being unwrapped. Are we going to see compression as far as margin? I think it's probably too early. Q1 was fairly strong. Q2, I think it's still going to be okay. Technology companies projected to achieve earnings growth around about 12%. So that's the overall theme. And I'm quite excited this time around because I feel as though that the uplift is going to continue in the short to medium term.
I mean, given earnings season, what should we look out for? I mean, clearly guidance is key there, but that ongoing uncertainty in regards to tariffs.
Yeah, I'm looking at exactly right. I mean, that's got to be implemented, and there was a surplus in June, which was very, very, very good news for the US economy. And so that's what President Trump's after. He naturally wants to see, the tariffs be a huge, important component as far as his revenue. Analysts forecast growth around about 5% year on year. That's for the quarter, 3.7% on revenue growth. So I think the overall momentum is going to be well received by the market. And I think it's more the next quarter when we look forward to, Q4, when it looks at Q3 earnings, because, you've got the tariff input and naturally a lot of these issues one would think, be put to bed.
Now, stock specifically, Pete, clearly a focus remaining there on the Mag 7, in particular, NVIDIA having eclipsed that $4 trillion mark.
Ooh, it's absolutely smoking hot, isn't it? I mean, just quite incredible. The chart tells a story. Who couldn't be in it? And it's just been dramatic uplift. When you look at the technical indicators there, it's just showtime, and it's been dynamic. And that's what drives stock prices higher. First off, you've got earnings, and secondly, everyone's fear of missing out. So it's been that's just a classic chart that tells the story. And maybe it's got 5 trillion written over it in the next 6 to 12 months, Andrew. It's pretty hard to say no.
Well, yeah, that's certainly a possibility, you would think. Pete, just looking at what else is coming to us this week, certainly a focus on a data dump from China.
Yeah, I want to keep an eye on that. Naturally, what's going on as far as growth, the trade tensions and how that all probably piecemeals together. And naturally, China's got to look at some growth to really get traction in Q3 and Q4. Do we see that bazooka that they've all been speaking about as far as stimulus? And and the other side, of course, is what goes on with the tariff situation. How's that going to be internalized? And I think that's the big market to really examine over the months ahead. China is going to be a very interesting case study.
How are you viewing iron ore demand out of China at the moment? I guess how that's affecting the broader market, given the price of iron ore actually jumped around 4% last week?
Yeah, look, the overall import of it is very, very strong, and the pricing is relatively cheap compared to the old days where you used to get 180 a tonne. So yes, it's had a bit of an uplift. Copper certainly had a very big uplift when President Trump said, that 50% tariff. So maybe he's going to look at other metals. Naturally, they are looking at steel and aluminium, but rolling that across to rare earths and quite possibly, other inputs as far as production of steel, production of other industrial metals. I wouldn't be surprised President Trump takes an aggressive look at that as well.